Artificial intelligence has fueled one of the strongest rallies in semiconductor history. Companies across the AI supply chain have seen their valuations climb as investors bet on years of explosive growth. Lam Research has been one of the biggest beneficiaries of this trend. But investing isn't about buying great companies at any price. It's about determining whether the market has already priced in all of that future growth, or whether an opportunity still exists. So here's the question we'll answer today. Has Wall Street already fully valued Lam Research, or does this AI enabler still offer compelling long-term upside? To answer that, we'll go beyond the headlines and examine the company's business model, competitive advantages, financial strength, growth opportunities, key risks, and valuation, building an investment thesis based on evidence, not market excitement. Before we can decide whether Lam Research is still undervalued, we first need to understand what the market is actually expecting from the company. Because every valuation begins with one simple question: what is already priced into the stock? After such a strong AI-driven rally, today's stock price reflects much more than Lam Research's current financial performance. It reflects the market's expectations for the future. Investors are betting that artificial intelligence will continue to drive massive demand for advanced semiconductors. That means more chip factories, more production capacity, and ultimately, more demand for the highly specialized equipment needed to manufacture those chips. If those expectations prove correct, Lam Research could continue to benefit from one of the most significant investment cycles the semiconductor industry has ever experienced. But if those expectations are already fully reflected in the stock price, future returns may be far more limited than many investors expect. That's why understanding the market's assumptions is only the first step. To determine whether those expectations are realistic, we first need to understand what Lam Research actually does, and why its technology has become so important to the future of semiconductor manufacturing. Artificial intelligence is undoubtedly creating enormous demand for advanced semiconductors, and that has become the primary reason many investors are optimistic about Lam Research. But focusing only on rising chip demand may overlook a much more important driver of the company's long-term growth. The real opportunity isn't simply that more AI chips will be produced. It's that every new generation of semiconductors is becoming significantly more difficult to manufacture. Smaller process nodes, more complex chip architectures, advanced memory, and 3D packaging all require increasingly sophisticated manufacturing processes. In other words, Lam Research doesn't just benefit from producing more chips, it also benefits from making every chip more complex to manufacture. If that trend continues, the company's growth potential could extend well beyond what many investors are currently expecting. That raises an important question. Why does increasing chip complexity matter so much to Lam Research? To answer that, we first need to understand exactly what the company does and the role it plays in manufacturing the world's most advanced semiconductors. Every advanced semiconductor begins as a blank silicon wafer. Before it becomes a high-performance AI chip, it must go through hundreds, sometimes even thousands, of highly precise manufacturing steps. Lam Research builds the equipment that performs many of these critical processes. Its technologies are used to remove microscopic layers of material, deposit new materials with atomic-level precision, and clean wafers throughout the manufacturing process. These steps are essential because even the smallest defect can reduce chip performance or render an entire wafer unusable. In other words, Lam Research doesn't design chips, and it doesn't manufacture them. Instead, it provides the highly specialized equipment that enables leading chipmakers to produce the world's most advanced semiconductors with exceptional precision and yield. Understanding what Lam Research does is only the beginning. The more important question is why chipmakers continue to rely on its technology, even when several other equipment manufacturers compete in the same industry. That is where the company's competitive advantage begins to emerge. Manufacturing an advanced semiconductor isn't simply about having the right equipment, it's about achieving consistent precision at an extraordinary scale. Every wafer contains billions of transistors, and even microscopic variations can significantly reduce manufacturing yield. That's why leading chip makers don't choose equipment based solely on price. They prioritize technologies that deliver higher yields, greater reliability, and consistent performance across millions of chips. For companies like TSMC, Samsung, and Micron, improving manufacturing yield by even a small percentage can translate into billions of dollars in additional revenue over the life of a fabrication plant. In that environment, the cost of production equipment becomes far less important than the value it creates. This is where Lam Research has built its competitive position. Its equipment isn't simply another manufacturing tool, it's a critical contributor to producing advanced semiconductors efficiently and profitably. But manufacturing yield is only part of the story. As AI chips become more powerful and semiconductor technology continues to advance, the manufacturing process itself is becoming dramatically more complex. And that trend may be creating an even bigger opportunity for Lam Research. For decades, the semiconductor industry improved chip performance by making transistors smaller and packing more of them onto a single chip. Today, that challenge has become exponentially more difficult. Modern AI processors contain tens of billions of transistors, multiple chiplets, advanced memory, and increasingly sophisticated packaging technologies. Manufacturing these devices requires extraordinary precision across hundreds of interconnected process steps. As chip complexity increases, so does the risk of manufacturing defects. Even the smallest imperfection can reduce performance, lower manufacturing yield, or waste an entire wafer worth thousands of dollars. In other words, chip complexity matters because it makes precision more valuable than ever before. And the greater the need for precision, the more critical advanced manufacturing equipment becomes. That naturally leads to the next question: which manufacturing processes make Lam Research such an indispensable partner for the world's leading semiconductor companies? Building an advanced semiconductor isn't a single manufacturing step, it's a sequence of hundreds of highly controlled processes that must be executed with near-perfect precision. Lam Research specializes in some of the most critical stages of that process, particularly etching, deposition, and wafer cleaning. These technologies help shape microscopic features, add ultra-thin material layers, and remove contaminants that could compromise chip performance. As semiconductor technology advances, these manufacturing steps become increasingly difficult to execute. Every new process node demands tighter tolerances, greater precision, and more consistent results than the generation before. That's why Lam Research's value isn't measured by the number of machines it sells. It's measured by its ability to help chipmakers manufacture increasingly complex semiconductors with higher yields, better performance, and greater production efficiency. Understanding the technology is important, but technology alone doesn't create a lasting competitive advantage. The next question is whether Lam Research has built a business that competitors can realistically challenge over the long term. In most industries, customers can switch suppliers if they find a lower price or a better product. Semiconductor manufacturing is different. Before a new piece of equipment can be used in high-volume production, it must go through an extensive qualification process to ensure it consistently delivers the required performance and manufacturing yield. That process can take months, or even longer, and involves significant engineering resources, testing, and operational risk. For a leading chipmaker, replacing a proven supplier isn't simply a purchasing decision. It means risking production efficiency, delaying product launches, and potentially reducing manufacturing yield. Those costs can far exceed any savings from buying a different machine. As a result, once Lam Research's equipment is qualified and integrated into a customer's manufacturing process, the relationship often extends for many years. That creates a powerful competitive advantage that is difficult for rivals to disrupt. Long-term customer relationships strengthen Lam Research's competitive position. But they're not the only source of its moat. The company's installed base creates another advantage, one that generates recurring revenue long after the initial equipment sale. Selling a semiconductor manufacturing system is only the beginning of the customer relationship. Once the equipment is installed, it requires regular maintenance, replacement parts, software upgrades, and process optimization to maintain peak performance. Because semiconductor fabrication plants operate around the clock, reliability is essential, and even short periods of downtime can be extremely costly. As Lam Research has expanded its installed base over many years, it has also built a growing stream of recurring service and support revenue. This business is typically more stable than equipment sales because customers continue to maintain existing production lines even when capital spending slows. That means every new system sold today has the potential to generate revenue for many years, strengthening both the quality and resilience of Lam Research's business model. A growing installed base improves the stability of Lam Research's revenue. But to understand the company's long-term growth potential, we also need to examine who its customers are and what ultimately drives their spending decisions. Unlike consumer businesses, Lam Research doesn't create demand on its own. Its growth depends on one critical decision made by the world's largest semiconductor manufacturers: how much they choose to invest in new fabrication capacity and advanced manufacturing technology. When companies like TSMC, Samsung, Micron, SK Hynix, and Intel increase capital spending, they purchase more wafer fabrication equipment to build new production lines and upgrade existing facilities. As one of the industry's leading equipment suppliers, Lam Research directly benefits from those investments. However, this also means the business is naturally cyclical. Customer spending rises during periods of aggressive expansion and slows when the industry reduces capital investment. Understanding this relationship is essential because Lam Research isn't simply an AI company. It is a company whose long-term growth is closely tied to semiconductor capital spending, and understanding what drives that spending is key to evaluating its future. If customer capital spending is the engine behind Lam Research's growth, the next question becomes even more important: why are semiconductor manufacturers investing so aggressively today, and can that level of spending continue over the long term? The semiconductor industry has always been cyclical. Periods of rapid expansion are often followed by slower investment as supply and demand return to balance. But the current AI investment cycle may be fundamentally different. Unlike previous technology upgrades driven by smartphones or personal computers, artificial intelligence is increasing demand across multiple markets at the same time, from cloud computing and data centers to enterprise software, autonomous systems, and edge devices. Meeting that demand requires not only more advanced chips, but also continuous investment in new manufacturing capacity. At the same time, each new generation of AI semiconductors is becoming more complex to produce, requiring more sophisticated manufacturing equipment than ever before. If these trends continue, Lam Research could benefit from both a longer investment cycle and a more technology-intensive manufacturing process than the industry has experienced in previous cycles. A compelling long-term story is important, but successful investing requires more than a strong narrative. The next step is to examine whether Lam Research's financial performance supports the investment case we've built so far. A great business doesn't just generate revenue, it converts that revenue into sustainable profits. That's one of the clearest signs of a durable competitive advantage. Lam Research has consistently maintained strong profitability, supported by its leadership in critical semiconductor manufacturing processes, long-term customer relationships, and a growing installed base that generates recurring service revenue. Unlike businesses that rely primarily on price competition, Lam Research competes on technology, process expertise, and manufacturing performance. That allows the company to earn attractive margins while continuing to invest heavily in research and development to maintain its technological leadership. Strong profitability is important because it provides the financial flexibility to innovate, return capital to shareholders, and navigate the inevitable cycles of the semiconductor industry from a position of strength. High profitability tells us the business creates value. But to understand whether Lam Research is actually growing that value over time, we need to examine the company's revenue and earnings performance across multiple semiconductor cycles. Unlike software companies that generate recurring subscription revenue, Lam Research operates in an industry where customer investment follows semiconductor capital spending cycles. When chipmakers build new fabrication plants or expand production capacity, demand for wafer fabrication equipment rises rapidly. But when supply catches up with demand or economic conditions weaken, customers often delay or reduce capital expenditures, causing equipment sales to slow. This cyclical pattern has been a defining characteristic of the semiconductor equipment industry for decades. However, each downturn has also been followed by a new wave of technological innovation that requires another round of investment in advanced manufacturing. For long-term investors, the key question isn't whether revenue will fluctuate, it almost certainly will. The more important question is whether each cycle leaves Lam Research in a stronger competitive position than before. With that perspective in mind, let's examine how Lam Research's revenue and earnings have evolved across multiple semiconductor cycles, and whether the business has continued to create long-term shareholder value. At this point, an important question naturally arises: is Lam Research truly a high-quality business? One of the best ways to answer that is by looking beyond revenue growth and focusing on three key indicators: gross margin, return on invested capital, and free cash flow margin. Over the past 5 fiscal years, Lam Research has consistently maintained a gross margin in the mid to high 40% range, suggesting that customers value its technology and manufacturing expertise over simply choosing the lowest cost supplier. Its return on invested capital has also remained exceptionally strong across multiple semiconductor cycles, indicating the company has consistently generated attractive returns from the capital invested in its business. Perhaps most importantly, Lam Research has consistently converted about a quarter of its revenue into free cash flow. That strong cash generation gives the company the flexibility to invest in innovation, return capital to shareholders, and remain resilient during industry downturns. Taken together, these three metrics paint the picture of a business with strong profitability, efficient capital allocation, and excellent cash generation, qualities investors typically look for in a world-class company. Financial quality is an important foundation. But the next question is just as important: has Lam Research translated that quality into long-term value creation for shareholders? High-quality businesses don't create value in a straight line, especially in a cyclical industry like semiconductor equipment. Periods of slower growth and temporary declines are part of the business. What matters is whether the company emerges from each cycle stronger than before. Over the long term, Lam Research has consistently expanded its business by benefiting from increasing semiconductor complexity, continuous technology transitions, and sustained investment in advanced manufacturing. While annual results may fluctuate, the company's long-term trajectory has remained positive. For long-term investors, that's the key distinction. Temporary volatility is a characteristic of the industry, but the ability to create more value over multiple cycles is what separates exceptional businesses from average ones. A business that consistently creates value deserves careful valuation. The next step is to determine whether today's share price already reflects that long-term potential, or whether the market is still underestimating Lam Research's future. While Lam Research has built a high-quality business, investors are ultimately paying for its future, not its past. That makes the company's long-term growth drivers far more important than its historical performance alone. The outlook for Lam Research will depend on several structural trends. Continued investment in artificial intelligence infrastructure, the increasing complexity of semiconductor manufacturing, advanced memory technologies, and the global expansion of fabrication capacity all have the potential to support demand over the coming years. At the same time, the business will remain influenced by semiconductor capital spending cycles. Growth is unlikely to follow a straight line, but if these long-term trends continue, Lam Research appears well-positioned to benefit from the next generation of semiconductor innovation. These growth drivers provide the foundation for estimating the company's future financial performance, and ultimately, its intrinsic value. With the long-term growth outlook now established, we can move to the most important question for investors: does today's share price already reflect that future potential, or is Lam Research still undervalued after the AI rally? After examining Lam Research's business model, competitive advantages, financial quality, and long-term growth prospects, the final step is estimating its intrinsic value. My valuation framework uses 3 scenarios rather than a single price target. The conservative value reflects weaker business conditions or periods of negative market sentiment. The historical value represents the company's long-term fundamental performance. The optimistic value assumes stronger business execution and more favorable market sentiment. Together, these 3 scenarios provide a valuation range that helps investors understand how intrinsic value may vary under different assumptions. They are not predictions of future share prices, but a framework for evaluating the relationship between market price and intrinsic value. As market conditions and business fundamentals evolve, these valuation ranges will also change. Ultimately, each investor must decide whether the current market price offers an adequate margin of safety based on their own investment discipline. Valuation is only as reliable as the assumptions behind it. Before reaching a final conclusion, it's important to examine the key risks that could cause reality to differ from today's expectations. Every investment thesis is built on assumptions, and those assumptions may not always prove correct. For Lam Research, the biggest risk is a prolonged slowdown in semiconductor capital spending. If chipmakers significantly reduce investment in new fabrication capacity, demand for wafer fabrication equipment could remain weaker than expected for an extended period. Another important risk is that the adoption of artificial intelligence may not translate into sustained equipment spending at the pace investors currently anticipate. While AI remains a powerful long-term trend, the timing and scale of future investments can vary considerably. Finally, the semiconductor industry has always been cyclical. Periods of strong growth are often followed by slower investment cycles, and that volatility is likely to remain part of the business. None of these risks necessarily invalidate the long-term investment case. However, they are important factors that investors should continue to monitor as the industry evolves. Every investment has uncertainties. The key is determining whether the company's long-term strengths outweigh those risks. That brings us to the final question: what is the overall investment thesis for Lam Research? Throughout this analysis, we've examined Lam Research from multiple perspectives, from its business model and competitive advantages to its financial quality, long-term growth drivers, valuation framework, and the risks that could influence its future performance. Each piece of evidence contributes to a more complete understanding of the business. Rather than focusing on short-term market movements, the objective is to understand how the company creates value, how durable its competitive position may be, and how that compares with the price offered by the market. Markets will continue to fluctuate. Business fundamentals will continue to evolve. As new information becomes available, every investment thesis should be reassessed with the same disciplined and objective approach. Ultimately, the purpose of this analysis is not to provide investment recommendations, but to provide a structured framework that helps investors develop their own independent conclusions through research, critical thinking, and long-term perspective. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching, and if you enjoyed this analysis, don't forget to like, subscribe, and share your thoughts in the comments below.